there! A lot more employers are offering a Roth option now, which is really exciting. So people will ask me, Laura, should I be putting money into my Roth 401k or my Roth IRA? That's a great question. So here are 3 key areas to know that are different between Roth 401ks and Roth IRAs. Number 1. Roth IRAs can be established just about anywhere. You can work with whatever investment company that you would like. There's a lot more flexibility in the investments and the choices that you can make inside a standalone Roth IRA. A Roth 401k, it's going to be limited to the options that you have in your 401k. Those are options that your employer establishes for you and could be a little more limited. So keep that in mind. Number 2. Distributions. Now this is different between the 401k and the standalone Roth IRA. That's due to IRS rules. The IRS looks at a standalone Roth IRA and looks at the ordering rules differently. So money that comes out of a Roth IRA, they're going to see your contributions coming out first, which is great because you paid with those with after-tax money. And then last will be the earnings. Whereas in a Roth 401k, the distribution rules are much more limited. You can only take money out of a Roth 401k if there are certain events, certain qualifying events. So that's important to keep in mind. Also, there's that 5-year clock for anything that says Roth on it. To touch the earnings, you have to have had the account open for 5 years. But big difference. With a Roth IRA, that is aggregate across all Roth IRAs. So if you just open up a Roth IRA and put in $10, that starts your clock, your 5-year clock on your Roth IRAs. And you could max out a Roth IRA much later down the road, and you've already established that 5-year clock. Not true for Roth 401ks. Each Roth 401k starts its own clock at that employer's plan. So that's kind of an important difference to know in the timing of distributions. Next, number 3, we're going to talk about creditor protection. This is where Roth 401ks have the advantage over Roth IRAs. Roth 401ks are under the rule of ERISA, which means that the creditor protection is a lot stronger. Whereas Roth IRAs, they fall under state rules as far as creditor protection. So depending on your state, that could be not very different from the federal rules, or it could be really different from the federal rules. So if creditor protection is an important concern for you, know that difference between Roth 401ks and Roth IRAs. However, something that's really kind of cool, if you're considering one or the other, is that they are independent of each other when we're talking about contributions. So maybe this is my 4th point, really. Contributions. For a Roth 401k, in 2024, you can put in up to $23,000 if you're under the age of 50, okay? That is independent from the contribution limits on a Roth IRA. In 2024, if you're under age 50, you could put up to $7,000. So really, you are allowed to do both. You could do a total of $30,000 in tax year 2024 into Roth assets. That's pretty cool. Now, if you're thinking about the income limits, that's another thing to think about. There are no income limits on a Roth 401k. You can make whatever and still be able to be eligible to contribute to the Roth 401k. Not true for the Roth IRA. They do have income limitations depending on how you file your taxes and what your earned income is. So you might be out of luck there if you are a high earner to contribute to a Roth IRA. Now, of course, if you've listened to me for a while, you know that there is the backdoor Roth option to get money into that Roth IRA, even if you are over those income limitations. But again, big difference between the Roth IRA and the Roth 401k. At the end of the day, if you could afford to do both, that's awesome and really would kick up your retirement savings and your tax-free growth. So that's maybe #goals, something to go for. But if you're trying to choose an either or, keep in mind the differences that I've outlined here and maybe talk with a financial advisor about which is more significant in your personal situation. Either way, have fun saving for retirement. Make sure it's a priority for you and you'll go far. Hope this was helpful. Please contact me if you have any questions. Have a great day.